Artificial intelligence is growing faster than anything humanity has ever seen. It's outpacing the internet, it's outpacing Bitcoin, it's outpacing every major technology in history. What once took decades to evolve is now happening in months. In just 2 years, we've gone from simple chatbots to systems that can generate scenes, write software, and replace entire departments of human labor. AI is spreading through the global economy at record speed, and the race to control it has become a race for power itself. Trillions are being poured into data centers, chips, and algorithms. Startups are reaching billion-dollar valuations before even releasing a product. Governments are drafting new laws to contain what they can barely understand. Everyone agrees this is the most transformative technology of the modern age, but not everyone agrees it's the best investment. According to macro investor Raoul, the real opportunity isn't where everyone's looking. He believes there's another technology that could capture even more value in the years ahead. In this video, we're going to break down Raoul's bold new prediction, the logic behind it, and why he believes this could become a $100 trillion opportunity that outshines everything else. And before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, let's begin.
So it's not like this is a gradual rise here. We're going up the curve where everything does this. We can already start to feel that it's happening so fast, you can't comprehend it. When you're on Twitter and you see these kind of models where you can just put in a couple of words and make almost a movie out of it. Right? 2 years ago, ChatGPT was barely started, and now we're at this. It's like, well, where's it going to be in another 2 years' time? And then another 2 years' time? It's beyond our comprehension. Oh, well, in the financial crisis, nobody knew who owned anything. When Lehman went under, there was a mad panic because we found out that each piece of collateral, that the thing that you give to borrow money, like you put a deposit on a house, that's collateral. Well, all of that was levered 30 times. So 30 people had the same claim on the same asset. So then you're like, okay, none of us actually own any of this stuff. And then we found out that you actually don't own your money in the bank either. And then that was a holy shit moment for me. Is like, okay, we have got to have a new system here because this is not going to be solved. And then suddenly somebody tapped me on the shoulder and said, you need to take a proper look at Bitcoin. And I'd heard about it, didn't know, but my job as a macro guy is to be open to new trends and ideas. And I looked at it and I realized that this new system of money, which is what it was at the time, was revolutionary in the fact that you could prove who owned everything because it's on the blockchain. And what was also revolutionary, it was fractionalizable. And we'll come on to why that's important in a sec. So I saw this and thought, you know what? This is the entire future of the financial system. So I started investing back then. So now people think, well, Bitcoin's at 100 grand, or 120 grand. What can I do? I can't afford it. No, that's not the point. You can buy 10 cents of it. It still goes up more than any asset. Well, it's the best performing asset in all human history. Since 2012, it's up 64 million% since I started looking at it. Now, I didn't, unfortunately, keep my original investment all the way through, but I know some people who did. I bought it and sold it, but have held on for a very long time. And all of my net worth is basically in this. In my liquid net worth is in crypto. So it goes up massively fast. On average, about 145% a year.
Artificial intelligence is expanding at a speed that feels unreal. The growth is no longer gradual, but explosive. What took the internet years to achieve, AI accomplished in months. In less than 2 years, text-based chat models turned into systems that can design buildings, compose music, and create full-length videos. The global economy is reorganizing around data, algorithms, and automation. Corporations are racing to secure computing power, and governments are investing heavily to avoid being left behind. Studies from McKinsey estimate that AI could add more than $14 trillion to the world economy by 2030. No previous technology has scaled this fast, yet the wealth being created is locked away. The companies driving this transformation, OpenAI, Anthropic, and xAI, are private. The biggest profits are going to venture funds and early investors. By the time these companies reach public markets, their valuations will already reflect years of compounding growth. For most people, there is no direct way to participate. Nvidia Nvidia, which supplies the hardware powering the AI revolution, has already reached a valuation that assumes decades of success. It no longer represents an early-stage opportunity. Raoul sees this as a familiar pattern. He agrees that AI is growing faster than any technology in history, but he believes it is not the best investment. The reason is simple. The most valuable layer of AI, the models and infrastructure, cannot be owned by the public. For him, the real opportunity lies in another exponential system that remains open to everyone. A system built on digital ownership and verifiable value. That system is blockchain. In Pal's view, blockchain gives ordinary people what AI does not: access. It allows anyone to own a share of the networks that will soon handle global payments, digital assets, and machine-to-machine transactions. It is the investable layer beneath the next wave of technology. AI will continue to expand, but the foundation enabling it to store and exchange value belongs to blockchain. AI may be the fastest creation humanity has ever built, but the technology that allows people to share in its value is already here, quietly compounding in the background. And to understand why that matters, we need to look at how the old financial system broke and how this new one emerged from its collapse.
Tech stocks, and they go up a bit more. But crypto's a complete paradigm shift. And so what it means is anybody can put in 10% of their monthly wage, however rich you are, and you can compound wealth at 100% a year, let's say. Okay, that's really powerful, even though it goes up and down a lot. So it can go down 70%, 80%, but over time, it just keeps going up. And that's based on the fact that it's essentially a network of money. The more people who join it, the more the value goes up because we're buying it. And the more activity that happens, the more valuable this whole thing gets. And then there are other cryptocurrencies that came, like Ethereum, that give you a smart contract, which is a whole way of programming the internet all over again. What we're creating is not only a new internet, but also the internet of money itself. So we're creating a whole new layer that people don't see yet because they think it's all a bunch of nonsense, but really it's just the future of the internet where money is embedded within it and value. So we talked about how you and I could get paid to capture our attention. This comes all on these rails. So if we're transitioning into this new system and we can all buy a bit of it, we can all make quite a lot of money. So you either get the choice. Do you buy the S&P 500, which is what you're told to buy, or you buy crypto, which grows at a lot? So then you start to realize once you do this for a period of time, you end up thinking, oh, fuck, I don't put enough into this. This is my answer. And the more people use it, the more the value goes up, the more it unfucks everybody's future, because it's a different system than that fiat system that we talked about before that keeps getting debased.
Raoul understanding of digital ownership began long before AI or crypto became household names. During the financial crisis of 2008, he watched the system unravel in real time. When Lehman Brothers collapsed, it exposed something shocking. No one actually knew who owned anything. The same collateral had been used to borrow money dozens of times. Every major bank held claims on the same assets, and once the chain broke, no one could trace what belonged to whom. The foundation of global finance, trust, had vanished overnight. That moment changed everything for Pal. He realized that ownership in the modern financial system was an illusion. The money in your account didn't truly belong to you. It was a liability on a bank's balance sheet. Stocks and bonds were held through intermediaries that could be frozen or lost. Once the crisis hit, millions of people learned that their wealth existed only as long as someone else allowed it to. For Pal, that was the wake-up call. He knew there had to be a new system that didn't rely on the promises of third parties. When Bitcoin appeared, it seemed like an answer to that surge. It introduced a new kind of trust, built not on institutions but on math. For the first time, ownership could be proven independently of any bank or government. Every transaction was recorded on a public ledger that anyone could verify. Nothing could be altered, hidden, or duplicated. That was revolutionary. Pal describes it as the moment the world learned how to prove who owns everything. It was also divisible. You didn't need to be wealthy to participate. A fraction of a Bitcoin still represented ownership in the same global network. That accessibility made it unlike any asset before it. Since its early days, Bitcoin has grown at an average rate of more than 100% per year, becoming the best performing investment in modern history. The financial system that failed in 2008 still exists, but its flaws are more visible than ever. Governments continue printing money, inflating debt, and diluting purchasing power. The cracks have not been repaired. What's different now is that the world finally has an alternative. Bitcoin proved that transparent ownership is possible. Blockchain expanded that concept beyond money. And if you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. It's built to give you quick, actionable insights so you can make smarter decisions without spending hours buried in charts or headlines. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in.
$1 trillion asset class across all of the different tokens and protocols. A lot of this is just technology. So if you think about the internet when it rose, we couldn't invest in it. Eventually we could buy some shares in Google and stuff, but it wasn't the internet itself. Right? It's businesses built on top of the internet. Here we can actually own the internet itself. And everybody can. So it's like a public service good that we can all buy some of. Okay, that's amazing. It's currently worth $4 trillion today in its current form. If we just follow the trend rate of growth, I think by about 2034, it's $100 trillion. So at only 4% of the journey. And this is why you can unfuck your future. If you're only 4% of the journey, you can make a lot of money. And you finally get to participate in this global internet infrastructure layer and a new system of money, and you sidestep all of the debasement of currency, and you're leaning into the future of AI because the AI are going to pay themselves using cryptocurrency, and you avoid all of the other issues we've talked about, so it becomes blindingly obvious that this is the answer. And what's amazing is you go and tell your parents or friends, and they just think you're an idiot. They think it's too risky. And then you say, but they don't understand that every year they're losing 8% of their money just by keeping it in a bank. And over 10 years, you've lost basically all of your purchasing power. You've got virtually nothing left. And this way you do the opposite. You start compounding gains really fast. And then they come and laugh at you every time it falls 70% every 4 years. And what you need to do at that point is just keep buying it over time. And every time I've done that, it just keeps compounding. So we've never had an asset that's done this before.
Raoul believes the discovery of Bitcoin opened the door to something much larger than digital money. It revealed a new way for value to move, grow, and multiply. Traditional assets like stocks or real estate depend on intermediaries and central authorities to function. Blockchain doesn't. It operates as a living network where each user contributes to the system's strength and value. The more people join, the more powerful and valuable it becomes. Powell describes it as the network effect of money itself. That dynamic explains why crypto assets have compounded faster than anything in financial history. Each new participant doesn't just add value, they expand it. When someone buys, transacts, or builds on the blockchain, they increase demand for the tokens that secure and operate it. That is why Bitcoin has averaged triple-digit growth annually since its inception. Ethereum took the same principle and added programmability, allowing users to embed financial logic directly into code. Smart contracts turned the blockchain into a platform, not just a ledger. That single shift created decentralized finance, tokenized assets, and applications that now process billions of dollars daily. Powell often calls this the Internet of Value. The first internet allowed information to move freely. The blockchain allows money to move the same way, but without the middlemen or restrictions that slowed traditional systems. Anyone, anywhere can own a share of this network. There are no minimums, no gatekeepers, and no permission required. That accessibility makes it unlike any investment class that came before. For the first time in history, global participation in a major technological revolution is open to everyone. Even the volatility that scares newcomers serves a purpose. It's the price of growth. Every correction in Bitcoin or Ethereum has been followed by higher highs as adoption expands. The network doesn't weaken with pullbacks, it consolidates and grows stronger. Powell views those drawdowns as opportunities to increase ownership in an asset class that is still in its early stage. And as these networks scale, the outcome becomes predictable. Participation compounds, liquidity deepens, value accelerates. Crypto isn't just an investment, it's a mechanism that multiplies wealth with every new user who joins. But the most important part of this story isn't how fast the network grows, it's how it compares to the rise of the internet and what that comparison says about where we are in the cycle today.
It's growing twice the speed of the internet and has been since the first 5 million internet users and the first 5 million crypto users. I've measured them since, and crypto.com does so. It's been growing at twice the speed. So this is the fastest adoption of any technology humanity has ever seen until AI has just come and beaten it. And again, the newspapers will tell you it's a scam. It's too volatile. It's never going to work. It's going to go to zero. Yet it's the fastest adoption of any technology that's ever been seen, and it's done, 60 million% return since 2012, and it started in 2009. When you measure it from that, the numbers are so stupid, it makes no sense. And even if you look at it in more recent years, even after the big drawdown in 2022, still doing 50 or 60% a year at worst. So you don't have to do a lot to unfuck your future. You just need to put some money into crypto. Particularly if you're young, you can take risk. You can go up and down. And we'll talk about the crypto risk curve and not fucking it up, because that's the other thing, is don't fuck this up, which is another important thing, is once you get there, you start thinking it's a casino. Oh, but that guy's made 100x and he made 1,000x and I need to do that. You don't need to do all of that stuff. If you're not careful, that's how you lose your money, is by playing the casino. You don't need to play the casino. You just need to buy some high quality assets and do nothing. Look at all the rich people in the world. Did they trade to get there? Most of them didn't. Jeff Bezos just held Amazon shares. Elon Musk just held a few company shares. All of these people have made it from basically one bet and just holding on and letting the gains compound.
Raoul has spent years studying how technology spreads. From electricity to the internet, every major breakthrough has followed the same pattern of exponential adoption. But nothing, not even the internet, has matched the speed of blockchain. When there were 5 million internet users, growth was already accelerating at an unprecedented pace. When crypto reached that same milestone, it began expanding at twice that speed. Since then, the trajectory has only steepened. It is now the fastest adoption curve ever recorded for a global technology. This acceleration has happened despite constant criticism. Every major innovation faces disbelief at first, and blockchain was no different. Media outlets called it a bubble, regulators called it dangerous, economists called it a fad. Yet over time, the facts kept proving them wrong. From 2012 to now, crypto's performance has outpaced every major asset class in the world. Even after severe market pullbacks, Bitcoin and Ethereum have continued to post average returns above 50% annually. For Powell, that isn't luck, it's network mathematics. Once a technology reaches a certain number of users, growth becomes self-reinforcing. This is why he says the only way to lose long-term is to misunderstand time. People get shaken out because they focus on the noise instead of the trend. The market can fall 70%, then recover and multiply again. The value keeps rising as more people join the system and build on top of it. He compares it to owning early shares of the internet itself, something investors never had the chance to do before. The blockchain gives that access directly. The danger, Powell warns, is treating it like a casino. Many chase small speculative tokens instead of accumulating the assets with proven network effects. The path to wealth, he says, is not trading but holding quality. Most of the world's richest individuals did not get there by flipping investments. They held ownership in powerful networks, Bezos with Amazon, Musk with Tesla. Crypto offers that same dynamic, but for an open network instead of a company. Every few years, a narrative tries to discredit it. Yet adoption doubles, the infrastructure grows, and the technology becomes more essential. Crypto has already outpaced the internet in speed. What comes next could redefine the size of global markets themselves, and that is where Powell's boldest prediction begins. A world where this network expands into $100 trillion of value.
The global equity market, all of equities in the entire world is, I don't know, something like 100 to 150 trillion. 200 trillion, let's say.
So do you see this wealth being transferred there?
Well, if you think about it, it's not only the wealth being transferred, but all of the companies are already talking about, oh, let's stop using the internet rails and the rails that we use for equities right now, and let's put them on crypto rails because it's more efficient. We know who owns it. It's faster. We can get, and the bond market's doing the same. And the stable coins is just the US dollar going onto the same. You can hear it. It's a super massive black hole sucking everything in. The whole financial system moves to it. And it's the infrastructure layer for it all, plus this savings layer, which is, let's call it Bitcoin as like the version of gold. And then we've got the ability to invest in this and it generates tokens. Of course, it's going to be worth 100 trillion and likely a lot more over time.
Raoul Pal believes the entire global financial system is being pulled toward blockchain. What began as a niche technology is now becoming the foundation for how assets, currencies, and data will move in the future. The total value of all crypto networks today sits near $4 trillion, a fraction of what Pal expects. Based on current adoption rates, he projects that number could rise to 100 trillion by 2034. That would make blockchain one of the largest asset classes in human history. The logic behind that projection is simple. Every major financial market is moving onto digital rails. Stock exchanges, bond markets, and even central banks are testing blockchain settlement systems. Stablecoins now process more transaction volume each month than Visa. The United States dollar is migrating onto crypto networks through tokenized versions, and corporate treasuries are beginning to hold digital assets as reserves. The direction of travel is clear. Everything is moving toward programmable ownership. Pal compares it to a black hole pulling in surrounding matter. The efficiency, transparency, and speed of blockchain are too powerful to ignore. Financial institutions can save billions by using it. Governments can track payments with precision. Investors can finally own assets without custodial risk. And as artificial intelligence expands, it will need a native financial layer to operate autonomously. That layer, Pal says, will be built on blockchain. The result is an open global system where every person can hold a direct stake in the infrastructure of value itself. To Pal, that's the greatest democratization of wealth in modern history. AI may be the fastest technology ever created, but the network that underpins it is the one poised to capture the value. The next great shift in global finance has already begun. Anyway, guys, that's all we have for today. Thanks for watching, and I'll see you all in the next video.